Welcome back to the channel, guys. This is Stocks to Play, where we give you the hottest trending penny stocks in the game. Today, I'm gonna switch it up a little bit, though. I'm gonna kind of break down and give you a little intro to how to trade penny stocks if you're a beginner out there. Cause when I started this about 7 years ago, man, I had to learn everything myself. There wasn't much out there, and if there was, it was just a whole bunch of crap and people misleading you to get you on their Discord or something like that. I don't have a Discord. I don't have none of that. I don't need any of that. I'm just providing information straight up. So I just kind of put something small together to try to help people out. I'm gonna start with misconceptions. Penny stocks, they're destined to fail. Like, these are not long-term plays. And you need to wrap your head around that. Like, these companies, 90%, 80% of them will not make it, you know? So you got to keep that in mind. Like, these plays are like very volatile. You play, the momentum, the trends, if it's a meme stock, whatever, you capitalize on the hype at that time. Don't get too caught up in what the company is doing, this and that. There's other plays for that, you know. But when it comes to penny stocks, it's a short term kind of play we're playing. Like, do not wipe these stocks. Don't get it twisted. Companies or penny stocks can definitely have longevity and proceed to having a great um time on the market and time overall, just like really profiting and benefiting from whatever business they're conducting out there. But most times, like, these penny stocks are getting heavily manipulated, and day traders like myself, we're taking profits. When we're taking profits, you should be taking profits too. Like, you're also gonna get stuck holding the bag. So I'm gonna say, like, straight up, like, these are not long-term plays. These penny stocks, do not get too caught up in the hype, and do not wipe these stocks. You should always be scaling out, you know. Next thing is entry and exit positions. Like, a lot of you guys, from what I can see, you fear of missing out and things like that, like hot news drops. Like, yo, forget all about all of that. Like, you should be breaking down a chart and knowing, okay, this is a great entry for me. I could give or take 5-10 cents here where I get in, and already know the plan, like where are you exiting it at, or where are you gonna start scaling out at. You know, you have to have a game plan, because there's been many a times I've seen stocks go up 100% and then lose all its gains and go back down to what it was a week ago. Like, that happens very often, and you can avoid that if you have a game plan, you know, like, and stop losses. Those are very crucial in the penny stock world. Like, you need to be taking advantage and utilizing stop losses, because you will get eaten alive out here, you know. Like, don't just buy into something because it's running. You don't want to buy at the high. That's the worst feeling, when you buy a stock and then you look in your bank app and you're already in the red. Like, nah, man, we don't play it like that. Like, we like to be in on things before they start popping. Or if you do take a risky play for the day, you already know where you're gonna cut your losses at, you know. So say I'm putting $1,000 into something, I'm only gonna risk 20%. I know the max I could lose on this deal is $200. I can keep it moving, you know. So you got to keep that in mind, you know. Really have a plan and execute your plan, you know. And the next thing is greed. Yo, greed will kill you, and it will destroy your portfolio. I've been trading for almost 7 years. In my first year, I learned the hard way. I probably lost, man, like $7,000 in two trades in less than like 5 minutes. And it was straight up me not knowing what I was doing. Got lucky the first couple times, and you just thought, like, hey, this is easy. It's not that easy. You got to be disciplined. You really got to be disciplined. And that leads me to my next point, discipline. Yo, penny stocks, it's more about money management and moving money and averaging down. Like, trying to break even on a play if you are in the red. Like, sometimes it's a breaking even is better than finishing in the red. At the end of the day, you're starting with a small account and you're trying to grow that daily, weekly, monthly to accumulate into a big account where you can actually do something and then take your money and put it into real stocks for the long term, if that's your plan. Or if you actually just want to develop another source of income to actually utilize. Like, that's what I do. I pay myself out every 2 weeks with my account. Every second Friday I will pay myself out, you know what I mean. One reason for that is because when I have way too much money in my stock account, I get a little gangster with it, and I want to throw down, if you know what I'm saying. But like that discipline, like it took me years to become disciplined, and discipline, money management, it's all under the same umbrella of emotions. Because when you're trading, you cannot trade with emotions. Like that will ruin your whole portfolio, man. Like when you see something bumping and your emotions is telling you this is gonna keep going, it's gonna keep going. Like, no, it's not, man. Nothing ever goes straight up. Things have pullback. Pullbacks are healthy. You gotta be very, very careful, with your trading on emotion. Like, don't do it. Make a plan, stick to it, check charts, look at your support levels, resistance levels, like really take it in before you just jump into a trade. You want to have a good start because it'll keep you more motivated in this grind, because the grind is real and this really works if you're willing to put the time in and not gamble. Like gambling versus trading, it's a big difference, man. Like, don't get it twisted. Like, we don't know what's gonna happen, but we can make educated decisions and do our due diligence to make a better trade and less of a gamble, if you understand what I'm saying. Like, we're putting our stop losses, we know what we can lose. Like, when I'm not gambling, because most times when you gamble, what you bet, if it doesn't go your way, you lose the whole thing. Stocks, you're not gonna lose the whole thing. So keep that in mind. Like, just make educated gambles, if you want to speak of it in that way. The next thing I'm going to cover is how I determine if I'll be entering a play. This is my own strategy. Um, this is kind of how I break it down, guys. I find a ticker, for instance, in a sector that I like that is bumping, whatever. Like right now, the AI sector is bumping. It's really bumping. Some of the biotechs are still bumping like that, but overall, penny stock market is doing pretty damn good. So I use a site called Finviz, and Finviz, it's a good site. It's I'm pretty sure a lot of you guys have heard of it, but you could go to Finviz, click on screener. What I like to do is come over to the country. I'll put USA most times. Where is it? Target price. You can see here all these options. Once you dial in to the specifics of what you're looking for, this can become very, very useful. Like very useful. Um, Super useful. I'm looking for stuff under $2. Click that. It started to refresh it, and then it starts giving you things. And like the best thing about it is you could come over here and it shows you the chart a bit. So if the chart is bumping, oh, 1 second. If the chart is bumping from your first initial glance here, you could dig deeper and really dissect it and do your due diligence. It's a really good site, man. Like really good site. You could search things based on relative volume, anything you want. Like I'm not gonna go too in depth with it right now. You guys could head over to the site and like check it out for yourself. But it's a really good site. I found some of my biggest plays on this site before the whole crowd was on it. Like it was crazy. So, but yeah, Finviz helps out a lot. Definitely. We also got here, price range. So I'm trading under $2 most times. Don't get it twisted. If I see a hot play that's above that, I'll take it. But most times I'm looking under $2. I know those are very volatile stocks. A lot of people will be buying in, even if they only buy 100 shares, 200 shares. That shit adds up. I'm looking for volatile plays. That's the game we're in. The company of the stock, like the stock itself could be an amazing company, has a lot going for it, but if there's no volume, bro, I'm not interested in it. Like I'm not here to hold a bag for a year to make a couple dollars on it. Like, no, that's not how I'm playing the game. Like I don't like to leave my money tied up because it could be doing something else in another stock for me if I pull it out or if I cut my losses quick, for instance. So I first like really take a look at these charts, because the chart tells you everything that you need to know initially. Yeah, so the charts definitely, like that's the first thing I'm looking at. I'm checking to see the trends, if there's any uptrends. Was there any big dips? Why did it dip? Was there a reverse split? Was there an offering made? Like, was there bad news, lawsuit, bankruptcy? There's a lot of reasons something could take a dip. Everyone always says buy the dip. Like, yo, bro, you better make sure something bad didn't happen for it to cause that dip just because you're gonna go buy it. Like, yo, do your due diligence. If there was a dip, find out why there was a dip and don't just jump on it. Like, shit happens, you know what I'm saying? So I'm checking the chart, man. I'm definitely checking the chart. We'll go over to an example for a second. I'm gonna go to Mullen because I've been watching Mullen stock a lot recently. I really like it. I played it a couple times already. 6 month chart. See, it's starting to curl up here right now. Base down here starting to curl, building higher support levels. As you can see, we like it. We know what it came from, what it could go back to. It's probably one of the most traded stocks on the Nasdaq, man. Like, the volume on this is insane all the time. Today is actually trading a little lower, but it's still trading pretty well. Like, this is what you look at immediately. First day, this is the 1 day chart right here. Not too much on that. 5 day, we can see it keeps gapping up, gapping up. There was some very good news on Mullen recently that's attributed to all of this. You got to check that stuff. When you see a chart and it's going down or coming up, like, go figure out why it's doing that. You know what I mean? So you could put together your own profile on this stock. Like, yo, we're like, man, like detectives, like, you know, like they profile someone, they build a case around them, they put together this whole package profile. Like, that's what we're doing with these stocks to make educated decisions. Like, that's what we do, you know. So whatever, 6 months, I like this chart. Like, I really do. I can see there's an uptrend coming here. There's been some pops, you know, it's holding its gains. And then another big thing I really like to look at right off the bat is the 52-week range. So it gives me kind of like my risk tolerance. Like, what am I really risking? Okay, I get in at 42 cents. The lowest it went to is 18 cents. Okay, I'm risking like 24 cents. Big deal. You know, I already know that. What's the chances of it going back to its lowest right now? But it helps you feel a little bit more confident so that when you do see your stock coming down a bit from where you bought it, you're not tripping like, oh, I gotta sell this shit right now. Like, nah, man, sometimes you just gotta be patient, you know, because how many times have you sold something because you thought it was tanking and it just took off on you a couple days later? Like, these supports levels are levels that these stocks like to bounce off of. So you gotta like really play it smart and track your shit, keep on top of your shit, you know? So I just used Mullen as an example. It is a play that I'm currently in. It's in the EV sector. Oh shit, it should be doing some big things soon. You know, it has been doing some big things. We keep it moving here. Mm. Oh, I talked about the 52-week high and low. That's big thing for me. I always check that. I like to know, like, oh, what's the lowest this thing's been? Can I risk that? Worst case, and then it helps me become more confident into making a play. You know, um, due diligence, man. No matter, unless you're gonna be one of these gamblers who's on stock twits and you're seeing people post tickers and you just go buy them based on what they said, like, you're gonna lose doing that. Let me tell you something. These people on talk twits, bro, talk whatever it is, they don't know nothing. They're just pumpers, bro. Like, they want you to buy into what they've already bought into. You know what I'm saying? So, like, just stay away. You could go on there, stock twits. You know what I like it for? The watchers. Like, I get to see, like, monitors, more eyes coming onto this stock, like, which is a good sign, right? When it has more exposure, that means people are seeing it, right? And sometimes people on stock twits do post due diligence and things like that, whatever. But overall, don't listen to these people on stock twits, bro. They're birds, like birds. You know, you're better off like spending 2 hours by yourself reading all the news that came out on the stock, breaking down a chart, go on YouTube, check some pattern, and just learn it yourself than thinking someone on stock twits knows what the fuck they're talking about. Like, sorry, you know, but straight up. Um, what do I use to check things? I use Finbiz, Yahoo Finance, which is, I love it. It's simple. The charts look good. All the due diligence comes out right there. Um, yeah, it's nothing that I'm paying for like that. I used to pay for Scotiabank had something called Flight Desk or something like that. It was like $180 a month, but I did not see any real benefit. It had the level 2 on there and stuff like that, but it wasn't nothing too crazy like that, you know? Moving on. Mistakes people make in the beginning that can be very costly. Okay, like I said, stock twits, yeah, don't fuck with nobody on stock twits like that, bro. Like, do your own fucking research. FOMO, fear of missing out, we know about that. That's emotions. You gotta control that. You don't want to be trading with emotions. Like, this will kill you, bro. This will not only kill you trading stocks. When you act off emotions, it can impact your life. in a lot of ways. You know what I'm saying? It really, really can. Bag holding. You know why people bag hold, man? It's because they don't play with their stop losses. They don't have a plan. They're not executing. They're not following through. Like the when you're bag holding, that same money that you were scared to cut your loss on, you could have made your money back, made some profit, kept it moving. Sometimes you may not make it all back in one trade, but like it's not gonna come back just sitting there on a stock that's lost momentum, that's probably doing worse than when you were trading it. Like the bag holding shit, that needs to stop. Firm believer in cutting losses quickly. I don't care if it popped after, it's fine. Like, or even hold some shares still. No one says you have to liquidate all your shares, but like these are just little things that'll help you not fuck up your whole portfolio in the first couple of weeks of trading, you know? Another thing is like averaging down. People like seem to think they need to buy everything one shot. Like, nah, man, like you don't need to do that. And I'm gonna say it like this: when you start off trading penny stocks, don't be going crazy. Buy 1,000 shares of a stock. That's it. Every 10 cents it goes up, you're making $100. You know what I mean? Every 10 cents it goes down, you're losing $100. So just start with 1,000 shares of each stock that you're trying to play, and keep it moving. Watch, learn, watch the charts. You could trade the same stock over and over and over again, and this helps too because you're becoming more familiar with how it moves throughout the days, the times of the days. Lunchtime, is it slower, does it pick up, what happens in the mornings? Like, familiarize yourself with a couple stocks that you can play routinely, because this is very beneficial. I've done it a lot of times in my past. But anyway, guys, that was just a quick rundown on how to trade penny stocks like a pro for beginners. Like, it's a learning experience. It takes a little bit of time for you to kind of find a strategy that works for you. Everyone has a different risk tolerance. Everyone wants different amounts of money or needs a different type of amount of money. Me personally, like, make a living off of just trading stocks. What's the problem? You go to work all day, 8 hours a day to make $150. If you could do it from your house, what's the problem? Don't get greedy. That little $100 you go to work for every day adds up to $3,000 a month. You make $60 to $100 every day on the stock market. It adds up like a paycheck at the end of the month. So don't get greedy. Anyway, like, comment, subscribe, Stocks to Play channel. I will see you guys again.